Eric Mwadith, Mwadith.com, with about 3 hours to go before the close of trading here, June 28, 2016. Let's take a look at markets off the highs of the day, but still showing a relatively good sized rebound after yesterday and Friday's drop. We see that crude oil is up about 2%, the VIX is down 16%, gold is down about 0.54. Let's take a look at those charts. Let's begin here with the VIX, and here we are seeing that the VIX did finally fail to hold, or let me put it this way, for now the VIX is failing to hold above the previous buy point level there, and the level we've been watching as a sign of strength for the VIX was 20.97. So anything below that, as we discussed over the weekend, would be bearish for the VIX, bullish for the general market. So as long as the VIX is trading below this number, we have to assume that this breakout attempt has failed. Take a look also at how it recorded the short-term high on the daily. We have an improvement in price, but the RSI did not follow through. So that's one reason why I think it is showing that it could actually over time see lower prices, not necessarily hour to hour, but probably day to day. Now, one thing I would like to point out here is there is a possibility that there might be another attempt to break out above this recent daily closing high, slightly, let's call it at about 25.50, in that range. If it can break out above this recent daily closing high, that would suggest that the market will have to retest the lows. The market would still be in trouble. But for now, the takeaway here is anything below 20.97 suggests that the VIX is failing. The market eventually will bounce. Now, there's also another consideration here, which in my opinion is significant in the sense that we've come and hit the recent attempts to move higher have been rejected at 69.1, forming a nice short-term double top, which might indicate also another reason why this could be looked upon as being a bearish developing VIX. Confirmation comes on the weekly chart, which right now is actually very bearish in my opinion, because this is where it has been stalling. In fact, just draw a line at about 61.8 on the weekly, and remember we talked about this during the last weekend's market analysis video. And again, take a look at what happened here. We've hit that level as we were suggesting could happen, and we see a pullback. The last couple of times the VIX has come to this level, we've seen major moves lower on a weekly basis for the VIX. So here again we are showing resistance, suggesting that week to week this might not be good for this instrument. Now let's switch gears here, take a look at the S&P 500 and go to the daily. And what we have here is a couple of things to consider. Number one is if you go and figure out where the movement of the lows began, which is right here for the S&P 500. So we moved above that range, market came off the lows, nice move since then. We draw a line from there, and as of right now you can see that it is doing its best to hold above this line with uniform activity. So this by itself is a strong indication as long as it is holding. Now of course we don't know, we can only go by what is in front of us, but as long as this is holding, this market could actually bounce. Keep in mind, it's not a trivial thing here that the market is doing its best to hold around the 200-day moving average. So if you take that and that price action and the RSI action, as long as they are holding, this market could easily bounce. Now what I'm gonna do here is switch markets a little bit. Let's take a look at the Canadian market, and I want to go to the hourly first as far as the Canadian market is concerned. So here we have the Canadian market on the hourly, about 6 months of data. Just want to show you what I was observing here is if you take this movement off the lows, which was successfully the market held these levels and has moved higher since then, you can figure out where the RSI moved higher, which is this level here. And what I'm getting at here is right now, if you take a look at how the chart is setting up here, it could be showing the first signs of a market that has held. You can see that ever since, this has been where the market has been bouncing. All these lows were successful, market did bounce. Of course, it wasn't immediate, but the market would have some reaction to the upside. Here we have uniform activity below the line and back above it. Now if you consider that, then this indicates that we shouldn't be too surprised that in the coming days markets move higher. Again, not necessarily hour to hour, but probably by the end of the week markets might be closing the week with a positive gain. Now if you take a look at the TSX daily, you can see similar type analysis. So we can figure out that this is where the RSI moved above a range. Of course, this here corresponds with this gap, and the market has been higher since on a closing basis. We draw a line from here, and you can see that we've been bouncing on this line for successful re-entries. Close here, close enough for the re-entry there. We held here recently for a couple days higher, and now we are coming back and doing the very best to hold above this line. There's another layer. This chart seems to show us a couple of things to consider. So that's one layer of resistance, support. One layer of support, and it's a strong argument for a market that wants to bounce as long as that is holding. Take the lows, extend the line right there. You can see again the Canadian market is showing that it is coming back to hold that level. As long as that is holding, one can reasonably expect a bounce. And there's one more line that comes from a previous highs line, so the line should be, we do a little bit different. I believe it's something like that. And what I'm getting at here is even this line is showing that after moving above this range, which is somewhere around here, the market has been bouncing on this line. We bounced here again for this re-entry, and now we are trying to coil ourselves back above that range. The best way to explain this is to do this probably on a 2-year daily, and I believe I discussed this past weekend. Maybe not, maybe I did that in my own mind, but I want to show you that this 2-year daily for the Canadian market, we go back to this range here, and I'll draw the line right there. So this is what I'm getting at. This was the previous resistance line connecting the highs there, this double top connecting this top, coming close to there. Also this double top was resistance, and once the market moved above that range here, we've been trading higher since, and the market has been bouncing on this line and moving higher. You can see here we are doing our best also to move back above that line. So I think those 3 lines might indicate to me that probably day to day this market eventually does bounce. So we got 3 lines there that I think make sense, or good argument that markets are poised to bounce. And I'll draw those lines one more time, so we can just, so there's a couple line here that's acting as back test. Line number 2 goes to this entry here, and then the third line is the line connecting RSI lows there. If those 3 lines are holding, this market is suggesting that the S&P 500 also starts coiling to the upside day to day, not necessarily hour to hour. Now let's go back to the NASDAQ, because as we come close to the end of the month, we have to start looking at monthly charts for an idea of what the market is trying to do. So we go back, let's go back about 13 years. That's because I like that number. And we can see here that over the last, let's call it 6 years or so, in fact going back about 7, market's been bouncing on this 50 level, successfully staging a nice move to new highs. All these bounces led to new highs. Here we held, and we could be trying to form a double bottom around the 50 level on the monthly. So month to month, maybe the market is just trying to form a double bottom before it moves higher, just like it did during this period here. So that's speculation on my part, but as we come close to the end of the month, those are the things we might start considering. Of course, if we break below that, then that's going to be for a major move lower. So the risk here is either support or a break of this trend line. Since we haven't seen the break, we have to assume that the market here wants to hold. And the reason why I lean towards a market that wants to hold is because the daily charts are still constructive. Now, I speculate, and it's just me, no hard evidence really, but just generally the way markets behave is, let me go back here, let's go back about 7 months on the NASDAQ, and you can see this either by using the RSI 26 or 14. In fact, the point of it here is because the RSI did trade below 30.9 for a couple of hours, it suggests that we are going to have to make fresh lows. So because we stayed below 30.9 for a couple of hours yesterday, I believe, we're going to have to potentially test this recent lows of yesterday, and then maybe that's when we start moving higher. I hope that makes sense. Let's go back to the hourly, and let's change this setting here to 14 for the RSI, because it gives a good picture. So because we spent a lot of time below 30.9 here, and here RSI has been moved back to the default on most charts of 14, because I want to explain this. Below 30.9 suggests that the market might have to move the RSI lower, hold above 30.9, coil up, but during this move lower here, prices are probably going to come to test these lows and hold, or even break through these lows. But what we are looking for is positive divergence, where the RSI improves as prices test recent lows, and this RSI improvement eventually might be the reason to now truly expect a bounce in the market. In other words, I think around here the market could easily move lower before it eventually moves higher. So that's my own thinking here. And you can see there's a reason for this also, because, and I know I'm spending a lot of time on this, but there's a recent break here. This break brought the market off that level there, and so we draw a line. And I just what I want to point out for now is coming back, if we show resistance on this line, again that might be confirmation in my thinking here that we start coiling lower. Let's go back to that hourly chart again, 6 months hourly for the NASDAQ. And what I'm trying to say here is, take a look at this. We spent some couple of hours here below 30.9, and those were not the lows. The market had to move higher, make fresh lows, and while it was doing that, you can see that the RSI did show an improvement, albeit very slight. So prices made fresh lows here, RSI showed an improvement, and because of that we eventually coiled higher. So right now what I'm anticipating is something similar to this, which is a test of the lows, maybe break through the lows, RSI shows an improvement at some point, and it is that positive divergence that eventually stages the real move to the upside. Now, this is also seen if we take a look at the VIX, and I know I'm going back and forth, but I had a reason for doing this. The VIX right now, even though it's down 14%, but on an hourly chart, it looks like it is coming back to show support here. As you can see, this is obvious support hour to hour, which again I suspect is suggestive that this market for now, hour to hour, the general market might pull back, the VIX might want to move higher, but this is, as long as the VIX is holding this line, the market is still gonna be struggling to hold the current early morning move. So this plays into my theory here that the general market might have to test the lows. Hope that makes sense. So you don't have to be an aggressive buyer of the market around here, is what I'm trying to say. Now we take a look at those commodities, and to be very honest, nothing has changed in my opinion since last weekend's part 2 market analysis. We can take a look at the USO as long as the RSI on the USO, and I've been saying this, I know you're tired of hearing it, but I'll say it again, as long as the RSI is below 30.9 on the monthly, one can expect a retest of these lows here. So this is the key. Anything below 30.9 on the USO monthly suggests that these lows here could still eventually be broken to the downside. And yet on the daily, just like we saw good support on the S&P 500 and the Canadian market, and I would have discussed other markets, but those are the ones I chose just to illustrate the point there. But the one thing we do see here, coming back to test the recent lows entry here, and of course that line that I'm drawing comes from this entry on the RSI, which began off this movement here. And so that was the movement in the RSI. Since then the market has moved high, of course, and we see that it is showing the possibility of a nice double bottom support on that line. And keep in mind that this is happening while the RSI here is making, the prices are making slight lows, RSI showing an improvement. That's good action. And also that same line or that level also happens to be showing a nice general support coming off the lows. So I think the day to day, as long as this is holding, you can see that the USO could actually even be looking to bounce. We can also see evidence of this because of lower lows in the price here, RSI showing an improvement, and maybe that is the reason why we've already seen this snapback move for the day. But the key is whether the USO can hold above 30.9. Anybody who wants to own this sector must insist that the USO is trading above 30.9 and that it is breaking out above the recent weekly closing high of 11.98. So a weekly breakout is needed, and the monthly RSI needs to be moving above 30.9 if this sector is to be successful. And again, feel free to refer to Sunday's part 2 video because I go into depth and pretty much repeat the same thing I'm saying here, just in case you did not get a chance to review that part 2 weekend market analysis. We take a look at gold, and here I'm just gonna go straight to what I think is happening here. Yes, gold is holding nicely above the previous weekly closing high. That's the key. It is holding above that level, and the level to watch there was at 123.65, which is the previous monthly closing high. So as long as the GLD is holding above this level, that's good. The thing that concerns me is how it is setting up right now. The setup is not very encouraging because we have the RSI making lower lows as prices did probe higher levels. So that does set the stage for a market that is questionable in my opinion here. So that negative divergence, as long as it remains, might suggest that eventually it stalls, but you can give it the benefit of the doubt as long as the monthly is breaking out above 123.65. Also, take a look at the daily, which is one of the reasons why I think there's a lot of struggle here for gold, because right now you can see that a couple of things are taking place with the resistance coming on this line here. We seem to be forming a very well constructed triple top there. Okay, that's not good. And then also, as discussed in part 2 from the Sunday's video, this is also showing resistance. Not good. As long as that's the case, one can still expect this to pull back. Hour to hour, we also saw that gold made a slight improvement hour to hour, but the RSI did not show that improvement. That negative divergence still sets the stage for a pullback in gold. But I would not question anybody if they still hold this sector, because gold is still trading with a GLD holding above 123.65. The gold instrument proper is still breaking out, and so anybody who wants to play that sector can still do so, as long as gold, the index itself, is trading above 1294.90. Because eventually I think the daily charts might suggest that the market moves higher. I go back to some of the stocks we've been watching, and here again we see that MEET is still staging another weekly move higher. It's been positive the last 1, 2, 3, 4, 5, and this week being week number 6 of a nice continuous move. I think the other stock that we've been watching can still be added on your watch list. It failed to break out the last 2-3 weeks, but I still insist here that if it can break out above the recent all-time weekly closing high there, the stock could eventually break out and do well. So let's not give up entirely here. Yes, it's been failing to break out after multiple attempts, failed here and failed again, but if it can, don't own this. So again, for now we can ignore this until such a time when it moves above the recent weekly closing high at 15.20. so it's a simple strategy here. We wait for momentum and a move above 15.20, otherwise we simply ignore. So for now it's not on our watch list as a buy candidate until it moves above 15.20. The other stock is a Brazilian stock, and there's two in this list, SBC. Now at first I wasn't gonna really highlight this because for a couple of reasons it's already moved above the previous buy point here, but I think with the market showing potential to move back or to pull back hour to hour, I would wait to see whether this one can pull back. Now also, I was not too convinced about the potential, but given that over the last couple of years it's had periods when it has had a nice sustained major run, I would not want to miss this one in case it has more upside. So watch this one, slightly extended based on the recent buy point here. So we cannot necessarily use this buy point unless of course we get a pullback. That level to watch was at 7.64. Of course the stock has already moved above that in the face of a worldwide market sell-off, which is impressive. You'd like it to move a little bit closer to this level for a potential rebound buy. Otherwise, I was also considering using this previous monthly closing low as an entry point. So as long as the stock is trading above 18.14, one can consider this one as clearing recent resistance levels. Of course, you can see this was support, 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 and finally support here, and then we failed through that and was resistance, resistance. So we've come all the way back, and as long as we are trading above 18.14, maybe this is one of those that could turn into a leadership stock. So you can either play this using this as your line on the sand, or waiting for a pullback and use this as where you want to consider your point of reference in terms of an entry. In either case, the RSI looks good above recent highs to 3-year highs, and also we look at the MACDs, or at least the secondary MACD is above 0 and moving to 3-year highs. So it does meet the minimum requirement. The entry point there was a little bit iffy, so a pullback here might help us get closer to the ideal buy point of 7.64. But I like it as an individual stock because it does meet the minimum requirement, has been moving higher in the face of worldwide sell-offs. The other one is a recent candidate, MGT, and the reason I'm still watching this is because ever since it moved above this recent buy point, our buy point here was the previous weekly closing high at 2.90. It has held above that on a week-to-week basis, hasn't closed below that. So the breakout continues being successful. The next buy point is when the stock moves above the current recent weekly closing high. So set an alert should the stock move above 3.45. That's going to be a trigger for another potential breakout and probably a chance for the stock to probe higher levels. I do like that the RSI still holds above 69.1 on the weekly, and that's why it is still on my watch list. A quick look at the monthly, and the stock is still looking good on the monthly. RSI right now still holding above 69.1 as the stock is still moving sideways. Any continued move above 69.1 is what you want to see. A breakout above 3.45 on the weekly. Here we can see that the RSIs are trading at 3-year highs. So the RSIs are doing exactly what they need to do, which is to trade at 3-year highs excuse me, the MACDs. MACDs are at 3-year highs. RSI needs to be above 69.1 if we are to see higher prices. As mentioned, there's one more Brazilian stock, and it is ABEV. Here we are going to use the recent monthly closing high right there for an entry, and the stock is timely in that it is just now moving above that level, the level to watch, or at least attempting to move above that level. The level here is at 5.59. The stock is at 5.66, so let's call it about 7 cents above that. If it can stay above this price range, it could have a chance of moving higher. RSI needs a little bit of a push so it can be above to 3-year highs. So the RSI needs a little bit of a push to move it to 3-year highs. MACDs are looking good in that the secondary MACD is already trading above 0, and the MACD is also at 3-year highs. So it does meet the minimum requirements in terms of the MACD. We just need the RSI and the price to continue holding. So those are the ideas for now, and here the assumption is at some point the market moves higher. Keep in mind, I would not be surprised the market pulls back hour to hour, but day to day it looks like as long as the daily charts are holding, we might see a bounce. Of course, I'll keep you guys posted. Always confusing, but we'd always try to use visual cues to figure out where this market is going. Eric Mwadhi, good luck as always. Peace and blessings. ESC.